Alright, good morning everyone, Richard here and welcome to the Friday edition of the Ninjacators Morning Bell. Right guys, before we get started today, I do have to apologize. There's quite a little bit of noise in the background here. We've had some pretty bad winds here in Cape Town over the past 2 days. One of the gutters blew down and somehow I think they're using one of these lifts or cranes to fix that. So I do apologize if you do hear any sort of noise in the background. In any case, let me just get that note out here. So yeah, yesterday's GDP data revealed that the US economy returned to growth in the third quarter, rising about 2.6% quarter on quarter. But it's also worth noting that Thursday's data indicated that the Federal Reserve interest rate hikes are also starting to hurt consumer spending. So like I mentioned before, investors will probably scrutinize key economic data going forward to see if the Fed's aggressive policy is actually having a notable effect on inflation. Right, and then 15 minutes ago we had the core PCE price index month-to-month figures that were released, and that fell in line with expectations. Alright, so let's jump right into the charts. Let's have a look at the ES, NQ, crude oil, and gold as always. If we do still have a bit of time, we'll as well look at the dollar index. As always, guys, you got any questions, please feel free to ask. Drop it there in the chat box, and I'll be more than happy to answer that for you. All right, the ES. Guys, we had this little red zone over here, the lower one, where price moved into on the ES and declined lower. I did mention that price might retest this low median line, which is this green line sloping downwards. That was at that stage, around about 318. Let me just get that right, 310-ish, round about there. And then price today is below that line. So I still feel that there's still some upside potential in the ES and in the NQ, but also with a spate of pretty bad earnings reports from Silicon Valley's biggest tech companies. It's been dragging the NQ down in particular. All these indices do eventually follow each other. So yeah, it'll be interesting to see if basically the ES can regain that line and close above it again. Still think that there's a possibility that the ES can move higher towards the 3,953-ish level, which is this upper zone to a little bit higher, right? So this was Wednesday, made sort of a doji there, and we had a down day. So could potentially have been a single zigzag to the upside, but if we do move to a smaller time frame, like the 4-hour, just give that a little while to load. Then we still have this sort of a 1, 2, 3, 4, 5 wave behavior. We could probably see 5, 6, 7, but this little swing over here was not as significant as this one over here, for example. Which still leads me to believe that, and I still, by the way, feel that this move to the upside is potentially corrective in nature and just a relief rally. Now, whether that's ended or not, we also had momentum divergence on the 4-hour right at that zone that we identified. That zone also had a peak in the volume profile from the previous decline from the previous months. And that together with, what was it, just mostly the volume profile, and these few little lows that appeared over here that price moved into and found resistance at. So I still think that there's a possibility that this was an A, B, C, and that this leg might be an extension, potentially an A, with B moving lower again, with another wave higher to follow, to potentially complete what we call a WXY or double zigzag corrective pattern. Again, this little swing over here might have been an ABC, but that's too short for me. I still think there's a possibility that price could still move higher. But again, we'll need to see on the daily a close around about the 3,810 level. And then I think that could be the first sign that the ES is preparing to move higher again. Let's just go to the daily quickly again. I'll show you that volume profile. Doing things in a bit of reverse here. In any case, get the volume profile out from this high in August to this low earlier this month. And we had this peak in the volume profile at the upper area where I think price could still potentially move towards, and then also we had this peak where we derived this lower sort of resistance zone from. Price moved straight into it, fell down back through the void, and straight into this peak over here. This is what I'm saying. Be crucial that price would need to break above this lower median line, the green line over here. Close potentially above it on a daily, then I think there's a good possibility we could head towards 3,953. I do have some questions coming in here from YouTube. We got Dancel Buluson. Sorry if I don't pronounce your name properly. Are the thick S support and resistance drawn by manual or computer? I actually drew that myself. Or are you referring to actually these green and red lines over here? Basically these lines, or sorry, these zones that I've drawn here, I derive from areas where we either have high volume peaks in the volume profile, or we have confluences of market geometry levels. Okay, these green and red lines you mean, or these zones. If you're talking or referring to the green red lines, it's actually this MACD divergence convergence indicator, which automatically plots momentum divergence between highs and lows, or consecutive highs and lows, etc., etc. So you probably prefer or familiar with momentum divergence. This is actually a paid version that we have in Ninjacators. We do also have a free version that works very similar to this, that automatically plots that for you. And if you just go and visit our YouTube channel, you'll see, I think one of the first videos that pop up there at Ninjacators YouTube channel, there is a link there. They can join the free indicators club of the month, and there is a version of that available for free if you would like to check that out. Then we have Mr. Jenske. Think about it. If he could trade it, he would not be on some. Listen, Mr. Jenske, I'm not trading you. I'm just analyzing the markets for you. So yeah, thanks for that nasty comment you got over there. But in any case, losing my chains of thought here. In any case, we got the market that reacted from a high volume profile zone, pulled back a little bit to a market geometry level, and as I just said, I think we can actually move a little bit higher. Let's move on to the NQ. Yeah, Dansal, also really hope the market does move high. But like I said, I think in the overall bigger picture that I'm still expecting lower prices. I think what's ever happening here on the ES and the NQ is just some sort of relief rally that either ended or could still extend a little bit higher. And then we're going to get one last final move lower, I believe, into potentially the first quarter of next year before we actually start seeing a significant move back to the upside. That might have even started right now. But if you're following these analysis, I'm still expecting potential low prices. Right, here we have the NQ. NQ also moved high from a zone that we identified beforehand. And then Dansel, that's just another one that I've done here before prices actually reached it. And I've got these support levels or zones from areas of market geometry. We had a nice little bounce to the upside. We had the zone around 11,505 to the upside of 11,662, which I also said price could move towards. And you'll see that these market geometry lines typically act as magnets, and they attract price, attract price quite often. So when they do, you can also then decide if price breaks above it and close above it, then it might then act as support. Let's say resistance turning into support sort of thing. But I was saying for a while now that the NQ is probably going to keep on bouncing between this upper and this lower zone. We've seen that. But obviously the NQ reacting to the downside way more aggressively than the ES, mostly because of these bad earning reports that came out of the major tech companies recently, I think even this week. So on the side of the NQ, not really much I can say. I would like to see price hopefully clear this upper area, and if it does, I think the next sort of area can move up towards, although on the NQ there's a lot of areas of support and resistance, and when you do see this on the market geometry, you typically get market conditions that move sideways, although it could be very volatile. We've definitely seen that in the NQ. So I think another close above, what is this, yesterday's high, although this looks pretty far away. The next area would be this green line sloping to the upside, and then above that we're probably going to go in towards 12,000 sort of region. But again, same thing as on the ES. I think what's ever happening here is just a relief rally, might get everyone excited, and then eventually see a reversal again and see prices head to new lows for the year, maybe even into next year. Right, let's proceed to crude oil. And this is a good example for Mr. Jinske there that left that comment. We had this beautiful, and I've been tracking this for a while, a 1, 2, 3, 4, 5 formation crude oil. And this is since prices obviously hit those highs earlier this year. I still think that this was, well, I thought that this might be corrective, but when I started seeing this decline that started in June this year, that it started making this very messy price action, which is very similar to either an ending diagonal or a leading diagonal. Now, ending diagonals typically indicate that prices are laying into a low, and then you're going to get a strong bullish move back to the upside, in this case in a bullish scenario, after a bearish corrective move. But I was also saying that the shape of this doesn't look like an ending diagonal. Ending diagonals typically look like this, if you're familiar with that. But the way I've been seeing it for a while is that the shape of this looks a lot to me like a leading diagonal. And we also were tracking what could have been 5 waves moves into an area way prior to price actually reaching this area. And there you go again, Dunsel. I created this zone before price reached there and expected that if we see a 5 wave move into, or 5 wave sequence into that area, and that area I derived from market geometry levels again, which basically is a lower channel. And these channels that I have on my chart here, I've drawn more than a year and a half ago. So they're still on my charts until these channels get broken to the downside, then I'll start thinking about removing them. But anyway, price reached this lower blue channel line. It also reached this green median line that it hit. And that's what we call a confluence area in market geometry with a 5 wave sequence, and we had the strong bounce back to the upside. And then again, as price moved higher, we had a target at this red box around 91.76 and 93.52, which basically was also, I think there was a volume profile peak here in combination with the center line of a channel again. And you can see over and over and over again how the markets will continuously respect these angular support and resistance lines. So we're not dealing with horizontal support and resistance areas. So when I do create these zones, that are basically just areas where we have crosses in these angular support and resistance lines, if that makes sense. So we had a strong move up. At that stage, I was thinking that it was potentially a 5 wave move or a 3 wave move, and that when this move lower started, that we potentially were dealing with a corrective move. And here's another great example where we identified a zone of potential support. It was 81.69 to 82.50. Price moves beautifully into it, also touched the lower channel line before price reached it, in conjunction again with market geometry. And I also think we had a 61.8 retracement level, the golden ratio, drawn from here to there, beautifully tagged of the 61.8, and price started moving higher. At that stage, I said we'll have more confidence that we're potentially seeing the end of a corrective move if price could clear and stay above the 85, I think it was 85 to 86 sort of level, which is this market geometry line. And you can see another great example of where price tried to close above it, but closed below it. Actually, we moved above, but closed below it. Tested it once, or actually once, twice, 3 times, 4 times. And then on Wednesday, during Wednesday's session, it looked like crude oil was going to close above the 86 level. It did, and I think now that is a pretty good sign that we potentially create, or crude oil created, a higher low over here, and that prices might be heading back to test these highs that were set on or in the 10th of October earlier this month, and potentially reach as high as that same center channel line where prices reacted from before, which is at 94.15 roundabouts there. Now in the bigger picture in crude oil, I said after a 5-wave sequence, it would be expected that we could see a decent retracement of this entire move to the downside. We also had the 38.2, slightly below where we had that resistance area. We could potentially see also price move into the center median line, which is a little bit below currently the 50% retracement, around about 95, almost 96. And perhaps even go towards the 61.8 at 100 again, and then only then get another move to the downside. Unless I'm completely wrong, and we'll know if we're wrong if prices were to break these lows that were set, where's it, a couple of weeks back. And then I would say that this was just a very small correction. Crude oil is very weak, and then we can see a decent strong move back downwards. But my expectations for the moment is that crude oil can still rate higher. And like I said, we're watching that 86 level for quite some time, actually for quite a few days, and crude oil finally cleared that. So I'm thinking there's a decent chance that crude can move back up again. So I think if I have to create a new zone here, then we're probably looking at something like that. Or maybe even higher. And the reason why I'm saying higher is that your most common correction that you get is a single A, B, C, or single zigzag A's. If this was a corrective move, a B, then we expect it will get a partner leg to this first A wave to the upside, and to give us something like this. And only then find resistance and price moves lower. But in this scenario, I just want to hide this one. I don't want to delete it. Let's layer the chart a little bit up. I love using shift pitchforks when I think I'm dealing with a corrective move. And in this case, I basically just go from this lows to that high to this low again. And this is also what I wanted to show you. Great indication that price is struggling a little bit at center median line. If it does move lower, we might see support around the 85.91, that area that it cleared, or a little bit higher up, where we have this 50% dash median line below today's current candle, very close to the 86 level, right? Oh, I should take the snap mode off. Sorry about that. Around 86.43 if we do get some sort of a move back lower. So crude oil needs to clear this center median line and close above it, and then I think it's really attainable that price could reach these highs we set on the 10th of October. But quite often you'll see that if you get single ABCs, or sorry, single zigzags, that your secondary wave or your C wave will travel the same distance as your A wave. So it could project even a little bit higher than that level. But let's not get too far ahead of ourselves, at least at this stage. I'm going to keep this pitchfork sloping to the upside here, still assuming that this entire bounce to the upside is corrective, and then use this to figure out where crude oil might be moving towards. But I did mention those levels there. I think they are attainable, but over the short term, maybe even today, tomorrow, or Tuesday next week, we can see price clear the center median line again around about 89.67, let's call it 90. Then I think we're heading towards these highs. on the 10th of October. Right, let's look at gold. Dunsel's asking, is the November elections push stocks higher? Very good question. I mean, historically, if you looked at when Trump became president, was it just like I don't know, it was a few days and the stock market moved lower. Everyone thought that, this is not going to work out. And then we had that insane rally to the upside in all stocks and indices in the US. Whether that's going to happen again, I really can't say. I mean, I think the biggest topic at the moment is still inflation. So, is the Fed actually, with its aggressive rate hikes, getting any sort of control over inflation? And I think if signs are going to start showing that inflation is slowing down, and what are some of these signs? These signs could be that the economy is starting to, experience hardship. People are starting to experience hardship. But one of the other problems is the job market's still very resilient and very strong. So, what's it going to take for the Fed to start easing the aggressive stance they have at the moment with the interest rate hikes? So, I think inflation is still the number one, or the biggest, how can I say, elephant in the room that needs to be addressed, and we need to start seeing it easing down a little bit before I think stocks will start heading higher. So, not sure, Danshal. We'll have to wait and see. But I think still in bigger picture, just from the technical analysis side of things, using my market geometry, I still think that there is a potential that the indices can still move lower. Maybe into that time frame, and then we only see a bounce to the upside. All right, guys, I'm just going to quickly do gold here, and then we'll call it a day. All right. In gold, very messy price action like we've seen in crude oil. I also think that we're still dealing with a corrective wave here. Very messy one. For a long time, been thinking what it is that we'll be dealing with here, and I think it's very complex, what we call a double zigzag, expanded flat. So let's say you have a market moving into and high, then you'll have some sort of three wave or combination of a three wave, with a three wave move back up again, that either breaks its highs or comes very close to those highs like it did over there, and then you're going to wait for a 5-wave move in a C wave. And I think that is what we're looking at here. I've been saying this for quite a while, although I must say that things became pretty messy after we've seen a 5-wave move to the downside here. I thought that this was the end of a C wave. Should actually mark it as 5, and the price was going to go higher. I said price needs to clear this area, didn't, came lower, and all of a sudden a 5-wave move turned into 1, 2, 3, 4, 5, 6, 7. Now that immediately still make me believe that, well, it didn't really immediately make me believe, but I still felt that we're still dealing with a C wave with a 5-wave movement, but in this scenario that we're actually dealing with a 5th wave that's tracing out as an ending diagonal. And I still don't think it's done going down yet. I do, however, think that this was either the end of that ending diagonal, or that we have a 1, a 2, and a 3, because the divide, we got 5 waves in ending diagonal. 1, 2, 3, 4, 5, and each one of them subdivides in 3 waves. Maybe this was the 1st wave, 2nd wave, and a 3rd wave of the 5th wave to complete the entire C wave. Hopefully that makes sense. But in any case, it does look like a lower high a lower high formed on Wednesday this week. But it's not really been a spectacular move higher in gold. I still think that we're going to get potentially another move lower here, potentially similar to this. Let me just get a line out here. If this was a lower high, or maybe we get another move higher and then a lower high, then I still think we could move into this sort of area, 1587.70 to the upside, 1615. Although we probably need to start adjusting that a little bit. And I would probably say that we need to start looking at level a little bit lower down, probably around about here, for that potential final wave of an ending diagonal. But even then, I might be completely wrong. And the only way that you think that you might be right in this case is if, let's say, we get another move lower, then gold would need to start breaking these previous lower highs. And the previous lower high for me of importance is where price previously found resistance in that zone that we identified previously. So we need to see a break above the 1732 to 1743 area. First sign that we might have completed or seen the end of an ending diagonal will also be when price breaks above this upper trend line of what I still propose to be an ending diagonal. So that would be your first sort of like good sign that an ending diagonal's ended, but the best sign would be if we see a break above this area. And at that stage, I think we can start getting a bit more confident that we could even see much higher prices for potentially the first quarter of next year, maybe even longer. All right, how are we doing for time there? Yeah, so I think we'd still have time to quickly look at the dollar index. The dollar index on a weekly, and I don't have live data for it, but I do have end of day data. So end of every single day, although this is on a weekly time frame, it does populate where prices should be for the previous day. But in any case, same thing that I've shown you on crude oil. I've had channel lines here on my charts for quite a long time, and we can see that one was this 1, 2, 3, 4 weeks ago that price reached this upper trend line for the first time in a long time. And now these lines were drawn prior to this move to the upside. So yeah, spanning back more than a year. Price reached that upper end and we had a reaction lower. And that's potentially also been helping stocks bounce obviously a little bit higher. Gold hasn't really reacted nicely to the upside just yet, but we've had this upper zone 114, let's call it 114.50 to 115, almost 116 on the upside, where we were saying that we might see a reaction. Although we had initial reaction, it came strongly back, but it made a lower low and a lower high, and has since moved lower again. Price hasn't reached the lower median line of this movement to the downside, which is currently still at around about 109, give or take. It came very, very close to it, so I still think that that might be attainable. And lower than that, we might see price even move into 106/96. Let's call it $107. Okay, that is what I'm thinking on the dollar index. But that being said, before I end things here today, price hasn't yet reached this upper median line. So whether this first touch of this upper channel line, this blue line, was just resulted in a correction, that is a possibility, and then perhaps see another move higher at a later stage that could eventually reach this upper median line before we see a more sizable corrective move to the downside. In any case, that's a little bit too far in the future for now. We did say we expected a move lower. Luckily, that did happen. But, aren't always right. But this is why we use techniques like this to try and forecast where markets might move towards. All right, guys, I think that is it for today. If there are any more questions, then please let me know. Dansel, thank you very much for your positive comments. And yeah, hopefully you attend some more sessions next week. If you're still a little bit, unsure of what I'm doing with all these market geometry lines, then just stick around. It will become clearer as you see this more and more often. That's what I always tell people. It might look like there's a lot of lines in my charts, but, I think your eyes will get a bit more trained to what to see and what it is that I'm seeing if you attend more of these sessions. Again, if you do miss any of these sessions, there's always a recording available, and that we record it live a few minutes after on our YouTube channel. So please do go and subscribe to our YouTube channel and hit the like and subscribe button, as well as the notification button if you do not mind. Right, guys, that is it from me today. Thanks so much. I hope you have a fantastic rest of your day. Great weekend, and I'll check you guys back again on Monday. Until next time, take care and goodbye.